And since that time, things have matured a lot. And this is really where, Amboss, our company has really moved the needle towards maturing and kind of building the market tooling around this innovation for trustless real-time payments that are based in Bitcoin. How do we prepare for a future where we're actually doing machine-to-machine payments that need to be trustless and need to be settled immediately? You can't have credit and debt, or like credit assessments on robots. It's either the payment went through or it didn't. And really that's how Bitcoin and the Lightning Network is positioned to really help scale that for trustless instant payments that happen anywhere in the world, whether you're human or not. Then it becomes very clear that we can offer a low risk product that actually helps Bitcoin progress from just an investment to something that we're exchanging on a daily basis, that we're using for day-to-day settlement and prepares us better for the future. Tether has primarily been using a very centralized blockchain called Tron to process most of its payments. But the cost per transaction is now at $3 to $6 per transaction. And really that doesn't scale, and we can see it rising exponentially. We really have to prepare for this technology adoption. And we have to do all the technology work and the research in advance so that we're ready. Because once payments start getting adopted, it is a network effect, and it does spread very rapidly. That small investment in payment infrastructure today actually compounds because you'll be saving on payment processing fees as this currency gets adopted or this technology gets adopted for payments. So save on payment processing fees, save on exchange fees to accumulate more Bitcoin, and then start putting your Bitcoin to work to actually supply the liquidity for other businesses to adopt Lightning payments.
By the end of this episode, you'll see how Lightning grew from bedrooms to boardrooms, why enterprises are finally paying attention, and how stablecoins and new Treasury strategies are setting up the next wave of adoption. Welcome back to the Enhanced AI Partners podcast, where we explore how leaders are scaling in fast-changing industries through people, process, and pragmatic AI. I'm your host, Johan Mejia, founder of Enhanced AI Partners. We help fintech and SaaS leaders scale smarter with AI-powered outbound content and workflow automation so they can grow without adding overhead. Today's theme is From Hobbyists to Enterprises, the maturation of Lightning Network. My guest today is Jesse Schrader, CEO and co-founder of Amboss. Jesse has been at the front lines of Bitcoin Lightning Network, starting from grassroots projects and now powering enterprise-grade payment infrastructure. Amboss is building trust, data transparency, and yield tools that serve everyone from smallholders to enterprise treasuries. Jesse also brings insight from the recent Bitcoin Custody and Treasury Summit, and we'll share how surprising new markets like Islamic finance are demanding Bitcoin-based solutions. Jesse, welcome. I'm excited to dive in.
Thanks so much for having me, Johan.
So let's talk about Lightning's maturation. And, you've said Lightning started in bedrooms. Now we're talking enterprises. What has changed?
Well, overall, the Lightning Network started really as a white paper. So it's kind of a research project. And from that white paper that was really published in 2015, there was a lot of development that happened until its ultimate launch in 2018. And from that point, it was really a command line tool. So this is, users are interacting directly with, a command line interface, and it's not the best user experience. At its core, it was working from like early days. We used to call it #reckless to actually put your Bitcoin to work to actually create a payment system and help Bitcoin scale. Like that was the whole vision. From there, from just raw code and command line interface, that's when a lot of the tools started to be built. So the first one that comes to mind is ThunderHub, which actually gave users buttons that they could click to send and receive money. And the payments actually worked so much faster than all of the payments that we've been used to with Bitcoin, where really they take 60 minutes. Well, Lightning just basically made all that time to process a payment disappear, because you could send a payment really in under a second. The these are very, very fast payments and it's final settlement. So what's behind this innovation is completely trustless payment systems. And that allows people to kind of operate in a global sense for sending a payment anywhere they want. Now, like from that initial phase of, true hobbyists are using this on consumer grade or hobbyist software or hardware like a Raspberry Pi, for example. Like you could run this full server that is capable of international finance. And since that time, things have matured a lot. And this is really where, Amboss, our company has really moved the needle towards maturing and kind of building the market tooling around this innovation for trustless real-time payments that are based in Bitcoin.
That's amazing. And that really paints the picture into where we're headed. And it feels exciting. I mean, I think you mentioned two words that we all like, and that's that there's trust behind this, and then then the other, it's payments are instant, which is, going from 60 minutes to instant payments is just, there's no comparison there. And from your perspective, what's been, the biggest mindset shift when moving from being hobbyists to enterprise level users?
Yeah, it's a very different customer group because hobbyists tend to like all of the modifications that they can do. They want to see all of the moving pieces. And as you scale up, the designs necessarily have to get simpler. If we want broad adoption, we're actually going to be removing a lot of the knobs that people can turn. And so if we can take kind of the Apple path, where, you've got, you're dealing with the raw hardware, bare metal at the server level to like the Apple design standard of like one button or even no buttons into the future. So this is kind of the progression that we need to take so that people don't have to understand all of the technical details that are behind a payment system. I mean, when you go to pay for any of the things that you want to purchase, really you're tapping a card, like as simple as it can get. You're not thinking about all of the credit and debt relationships, all of the customer and consumer due diligence that's happening behind the scenes, all of the advertising that is built on these data exchange systems. You're not thinking about any of those things, and you shouldn't have to. But 100%. Like the reality is there's risk kind of baked into a design that we've become very familiar with of credit and debt systems that like comprise our payments today that we deal with on a daily basis. But looking forward, how do we prepare for a future where we're actually doing machine to machine payments that need to be trustless and need to be settled immediately? You can't have credit and debt or like credit assessments on robots. It's either the payment went through or it didn't. And really that's how Bitcoin and the Lightning Network is positioned to really help scale that for trustless instant payments that happen anywhere in the world, whether you're human or not.
And, with that scale comes treasury and custody challenges. So you just returned from, the Bitcoin Custody and Treasury Summit. Was there anything in particular that stood out that, made you think or rethink your strategy?
Yeah, so I was on a panel called Where Does the Yield Come From? And that was, it's almost a meme at this point. So since we've been focused on the payment system, we need liquidity that actually makes trustless payments possible. Like if you remove credit and debt from the system, then you have to have liquidity because that means that the payments can be trustless. And out of that, in exchange for that liquidity, what we're offering is a yield service. And I think a lot of people in the Bitcoin space have had, a really bad taste in their mouth from yield services that they've seen before. BlockFi, Celsius, even FTX that had really catastrophic blowups. It was very clear that the yield was based on lending and rehypothecation. So lending the same assets out multiple times. But what we're actually working on is we know where the yield comes from. It comes from the payment infrastructure and actually kind of becoming your own Visa or your own MasterCard. Like you are now a participant in this payment network and earning whenever there is payment activity. And the outcome of that conference and that panel really was there is immense interest in earning yields on your Bitcoin. Why wouldn't there be? But having to take into account all of the risks from failed yield services that came from BlockFi and Celsius, how can we build something different? And how do you identify the risks before a blowup happens and understand deeply where does yield come from? And if you can clearly point to it comes from added utility for payments, then it becomes very clear that we can offer a low risk product that actually helps Bitcoin progress from just an investment to something that we're exchanging on a daily basis, that we're using for day-to-day settlement and prepares us better for the future.
I mean, that's just amazing to think about, and still trying to wrap my head around it. And how are enterprises approaching Bitcoin Treasury differently today than a few years back, and even 10 years back?
Yeah, so because there's been so much interest in actually using our yield service, we got a lot of interest from Bitcoin Treasury companies. That's been the theme of the year is a new Bitcoin Treasury company has started up where, they're issuing shares, they're purchasing Bitcoin and accumulating Bitcoin and trying to do what they're calling accretive dilution. But overall, there's a lot of interest in long-term. How does the Bitcoin Treasury company playbook mature and how does it become, very sustainable? Once capital markets are tapped out, once the Bitcoin Treasury companies have removed all of the inefficiencies and started to move more towards Bitcoin, well, how do they position themselves well for the future? And a lot of them are looking at tapping into the payment network or Bitcoin's ability to do payment processing. And by positioning that way, they're kind of reducing trust in the overall payment system and preparing themselves better for the future. But one thing that we've learned is Bitcoin Treasury companies actually require that they use a custodian because they're actually having to get their board to approve a custody setup and the security. Many of them have to use regulated custodians. And Bitcoin Treasury companies have actually been helping us get in contact with custodians and helping the custodians get excited about moving Bitcoin forward from a store of value into a medium of exchange. And that provides tremendous opportunities for Bitcoin Treasury companies to actually help Bitcoin and give back, not just an extractive value.
Now, how are enterprises approaching Bitcoin Treasury differently today than in the early days, 5 years back, 10 years before? So what have you seen on your side?
Well, Bitcoin Treasuries themselves have evolved. I think many of them started with self-custody and really single signature security. But now things have evolved to multi-signature custody. But now we're operating at a completely different scale. I think the theme of this year has been, Bitcoin Treasury companies. So this is where they're issuing shares in their company and accumulating Bitcoin. Now, from there, many of those companies we've learned have to use qualified custodians because they're dealing with really shocking, surprising amounts of Bitcoin. Just take a look at Strategy, for example, where they're holding now over 600,000 Bitcoin on their balance sheet. So incredible amounts of value. And that needs to be secured and have experts secure it. And as we've been having conversations with additional Bitcoin treasury companies, many of them have to use custodians. So when it comes to offering them a yield service that they're keenly interested in, because not only does it get them access to more Bitcoin in Bitcoin revenues, but it also gives them the possibility to potentially look at a different tax structure where maybe the Bitcoin held is not just an investment, but now it's being held as working capital. But the product that we designed actually designs for self-custody. So have very minimal risk, areas like of attack. Just try and minimize the attack vectors as much as possible and try and move away from the custodial yield model. And so we designed it to be self-custody, but Bitcoin treasury companies having to use custodians can't take self-custody, so they have to use a custodial partner. And really the Bitcoin treasury companies have been a driving force for adoption of our yield service, which is called Rails, and have really been moving that conversation forward. So very excited on that front, and really follows the maturation of the space from single signature custody to multi-signature custody to now that there's additional opportunities when it comes to yield services and kind of moving Bitcoin forward, as well as opening up the possibilities for new business lines to come through when they're thinking about Bitcoin as a medium of exchange.
And what's one challenge you see around custodians that Amboss is helping to solve?
For custodians, I think one thing that we're going to have to manage is really how quickly can this be adopted. I think there's so much interest in earning yield on your Bitcoin without giving up custody. But where does the yield come from? We have to circle back to that. And really it comes from payment activity. And so if I did a poll of the room to see who was interested in earning yield on their Bitcoin, well, just about everybody's hand would be raised. But if I asked that same or a similar question to say, who's doing payments on the Lightning Network using Bitcoin? Well, you could imagine I'm only going to get a couple of hands raised. So how do I bridge that gap when there's so much interest in this new business line, but I do need to take concrete actions to start adopting Bitcoin as a payment system. And in so doing, what we're seeing, because we have so much interest, it actually reduces the cost of payment processing. So the more Bitcoin we onboard, the cheaper the payments get. And right now, the payment processing cost for Lightning Network payments is 0.29%. So that is right now 10 times cheaper than a standard Visa or MasterCard transaction at 3%. And that's on cost alone. That's not even taking into consideration the risk of chargebacks, which is a major source of losses for a business. And it's also not taking into consideration how quickly the transactions are happening for final settlement. So for a credit card transaction, the money might not show up until weeks later, causing cash flow problems for businesses. But when you have final settlement, well, as soon as the payment is made, it's already in your account, ready to be spent or used for another purpose.
So you're, not only saving people 10 times, and sometimes we don't realize how high the fees are, and I think we are used to it. That's pretty much the only option we get now. So you're giving everyone an alternative payment option that's quicker, and the fees are way lower for the merchant. So it's a win-win for both consumers and businesses as well. So that's a pretty key insight, and it gives a real-time perspective into where Amboss is and where you guys are headed. And this Treasury connects directly to another big theme, which is stablecoins on Lightning. So during the past few years, we've seen stablecoins gaining momentum, and I feel like especially the past couple of years, we've seen new momentum. How do you see them fitting into Lightning's features and Lightning's future as well?
Oh, sure. So stablecoins fit in marvelously well to the Lightning Network. One of the innovations that has really been spearheaded by Lightning Labs, one of the key players in developing the Lightning Network protocol, is something called Taproot assets. And back in 2017, really, or actually more recently than that, was actually the Taproot asset upgrade to Bitcoin. So it's actually capable of doing these new functions. And what Lightning Labs figured out is you could issue new assets natively on Bitcoin. So without adding a new blockchain, you could actually introduce these additional assets. And the focus was stablecoins, because stablecoins already have product market fit on the payment side. Just last year, we saw over $20 trillion worth of stablecoin payments. That has outpaced Visa as a payment processor. And most of it is happening on Tether. So $10 trillion were processed using USDT, which is Tether's product. Additionally, we've seen regulators move forward for stablecoin legislation. And what we saw was the Genius Act was adopted. And really that provides some regulated guardrails for how stablecoins should be adopted. And so these are a couple of the pieces of momentum behind this shift to stablecoins. Now, the Taproot asset upgrade means that you don't need to introduce a new blockchain in order to process these payments. And Tether has primarily been using a very centralized blockchain called Tron to process most of its payments. But the cost per transaction is now at $3 to $6 per transaction. And really that doesn't scale. And we can see it rising exponentially. So we've seen Tether move from blockchain to try and avoid higher fees. But what they figured out and what they've announced now multiple times this year is their intention to natively issue USDT, their primary stablecoin, on the Lightning Network. And that allows really unbounded scalability. There's no limit to how many transactions can be processed on the Lightning Network because it scales in a completely different way. You can simply add another server to be able to process more transactions, which is something that, that's how the internet scales. This technology scales like the internet. And it allows us to have a number of payments that really matches how quickly things are moving in this internet age. So you can have one payment per HTTP request. I think most other blockchains would struggle to be able to process one payment per TikTok video. So that's the threshold that we're dealing with, and Lightning is really what makes this unbounded. So it prepares us much better for the future, and it also gives us the ability to process stablecoin payments natively on the Lightning Network. And that's a huge unlock for any content creator. I mean, imagine as you're talking, there's payments being streamed to you, like Bitcoin streaming income. I think that's where all of us want to get to. And now it's possible. We're still waiting on USDT to be issued natively on the Lightning Network, but we're already seeing some stablecoins being deployed on the Lightning Network. And we're watching strong adoption from that standpoint, because we know that stablecoins have product market fit on the payment side.
I think that's gold right there. And you mentioned a couple things that are pretty interesting. So endless scalability, which is, I mean, crazy to think about, and stablecoins being able to natively join the network, which is, I think, something that they've struggled to do before. And building a new platform cost millions and billions of dollars for them to do, while Lightning is already something that's already working. And from your perspective, where's the real value versus just hype in these stablecoins?
I think the real value falls in the liquidity providing. So kind of some of the reasons that we've actually built Rails as a yield service is that, we can attract some extremely deep capital. So we can put this Bitcoin to work to actually be able to process payments and process very large payments without introducing credit and debt risks into the system. So this is the true answer to the 2008 financial crisis, where things got leveraged, to unbelievable degrees. And now we have a system that isn't going to be subject to all the bankruptcy risks and contagion that characterized the 2008 financial crisis. This is the technology that helps us move beyond, have a lower risk system and also position us better for the future.
And if an enterprise, or even you mentioned the content creator, wanted to test stablecoins tomorrow, where should they start? What would be your advice to them?
Yeah, so for content creators, there's several Lightning wallets that are out there that are ready to be used. So Wallet of Satoshi is extremely popular, but also you can use Phoenix Wallet, which actually allows you to maintain self-custody, which is huge. That means that you're not going to lose your funds even if the company disappears or has some other issue. So that's what allows you to reduce risk. Now, from there, we're seeing businesses start to adopt Lightning payments. So if a content creator is getting paid in Bitcoin, well, let's give them a place to spend it. And many businesses are starting to accumulate Bitcoin, and they're thinking about a Bitcoin accumulation strategy. And many businesses are thinking about, oh, well, that means purchasing it from an exchange. But what you can actually do at lower cost is start converting your existing revenue lines, your existing business lines, into Bitcoin generating machines. So really start earning Bitcoin instead of buying it at the exchange. So this is what is possible. And if a business wants to adopt that, I would point them to Voltage to actually start to take advantage of some of the Bitcoin payments possibilities. And these are all components of the market that is really behind this liquidity. So Amboss is operating on the back end to make sure that each of these businesses can deliver a superior user experience when it comes to payments. So that means operating without failures and operating for very large payments, where I think Lightning Network has already shown product market fit for micro payments and like the machine-to-machine payments, even content creator tipping. But what's actually possible is to be able to settle $1 million payments over the Lightning Network. And Amboss is the way that that infrastructure actually gets built, because there's markets and there's deep capital that is waiting to be deployed for these purposes to answer the need of large payments that are settling instantly anywhere in the world.
I think that's very attractive for a lot of people, and for a lot of our listeners, being able to move large amounts of money or payments instantly, and making sure that the money's going to be there, get there without any delays. Now, you've had an influx of Islamic finance users, and we spoke about that a little before, but can you tell us a little bit more about that and what drove that demand?
Yeah, this is something that really surprised us when we launched Rails as a yield service. When we, launched with a wait list and started onboarding customers and having those first customer conversations, we started getting a lot of questions about Islamic finance. And that's not something that we had studied up on to deeply understand what Islamic finance is. And what I learned, and I'll just share a bit about what I've learned, and part of the journey here of understanding this is under Sharia law, and talk about like Sharia compliance, it doesn't allow for usury, which is the lending of money or kind of earning interest from lending. And what I didn't realize was that our Rails product, as a payment infrastructure service, like we're using Bitcoin to create payments infrastructure and earning money from providing that service. But this is a way to earn yield without doing lending, so without doing usury. So in the Islamic finance world, they talk about riba, which is interest derived from usury. And this is Bitcoin itself, is anti-riba money, which is the name of a new book, published by the Muslim Bitcoiner is what he goes by. But this is kind of the next phase, is that I can use my money not to be extractive and not to take advantage of other people, but to provide an honest resource to help them receive payments without, doing some predatory lending. So after we launched this product, we just got so many questions about, Islamic finance compatibility. And it's really opened up this huge rabbit hole because there is so much capital in the Islamic finance community that is looking for a home. They're looking for investments that are low risk. And here I am with a product that just happens to meet the qualifications, or at least appears to. And so as we progress, we'll be trying to learn more about Islamic finance regulations and see if we can get an authority to speak, with their expertise to do a deep analysis on whether Rails meets the threshold of being able to answer the needs of Islamic finance. And also, another piece that I've learned is it's not just experts that are doing the assessment, it's also individuals. So while expert assessments are useful to lend some authority to this, at the end of the day, it's up to the individual to do their own research, which is a very Bitcoin way to do things. Don't trust, verify.
And how does Amboss enable the yield without lending? And why is that such a differentiator from what we're used to seeing?
Yeah, maybe if I could just talk about traditional finance first, is like our money is debt. If you're talking about the US dollar, 100%. The basis of the US dollar is a debt note, US Treasuries. So really this is saying the government will pay you back, and as kind of compensation for taking the risk that the US doesn't, we're going to pay you an interest rate. And that's been around 4% for US Treasuries, which is kind of implicitly telling you the risk of holding the United States debt. The lender of last resort is kind of what it's called. But basically our money is debt, and I think this truth has flown under the radar. But Bitcoin itself actually has no debt within the system. It is you have to put in the work first in order to create these tokens. You're spending all of this energy on mining and guessing at numbers and running calculations in order to generate some of these tokens of Bitcoin. And that is fundamentally different. So it's not a debt-based currency. So when we're talking about yield on top of that, well, where does that yield come from? And if I can make another analogy to a power company, if you're, generating all this power, how are you going to deliver it to the customers? You could use, your existing electrical grid, and you could charge people for each electron that you deliver to their homes. And, I think we're all familiar with the the power company coming to read our meter and be able to see how much power we've used. But there's also additional ways that power companies make money, and that's with the new connections. So to get connected to our power grid, we're going to charge you this installation fee to really keep this service going. And for Rails customers, you have something that's very similar. So for Rails, you're routing payments. So it's like earning a little bit for every electron or every Satoshi that gets delivered, you get to take a small fee. Additionally, if you want to get connected to the Lightning Network, you're going to have to pay a fee to get connected. So if you're a new business, instead of paying Visa and MasterCard payment processing fees, you pay ahead of time to say, let me get connected. And then that allows service providers to earn some to form that initial connection and then continue to earn money as payments continue to be routed. So those are the two ways that Bitcoin and Rails customers actually earn, additional Bitcoin without giving up custody and without introducing lending or usury into their system.
I think that's, an angle most people forget, how traditional finance, traditional payment systems work at the moment. And, it hasn't changed in decades. So this really paints the picture into where we're headed and where we're at the moment. And, breaking what's been done the same for, like I mentioned, for decades. And is there a story that best captures this unexpected adoption that you've seen, from stablecoins, Islamic finance, and even business and enterprises, connecting to the network? So is there any story that best captures this unexpected adoption that you'd like to share?
I might zoom out a bit more to actually share a story about Bitcoin Jungle, a circular economy that has really popped up in Costa Rica. And I got the pleasure of meeting the founder of Bitcoin Jungle, and he's of the developer type, so I don't think he's told the story very much. But he developed a wallet based off of another open source wallet, and he called it Bitcoin Jungle. And he went to the local farmers market to actually get one of the vendors there to start accepting Bitcoin payments, and he was successful. And so he would come and pay for the groceries or the produce that he was buying to this vendor. And at the end of the week, he told the vendor that, if you want, I'll come every week and I'll buy the Bitcoin that you've earned at the end of the week. And so he'll show up with a stack of cash ready to buy that Bitcoin. And the other vendors at the farmers market could not help but look over their shoulder to see these incredible amount of cash be thrown at this vendor. And they're, of course, curious, what is this vendor doing? What is going on? How do I have that happen at my stall? And by doing that, that entire farmers market is now accepting Lightning payments and Bitcoin payments. And what I learned from Bitcoin Jungle is, in order to process all those payments, they actually had to use our liquidity marketplace called Magma. And that's really, so as things have evolved, Rails is really an automation of our liquidity marketplace. So now I've got people with capital that now automatically serve the liquidity to support new wallets and new communities popping up. And so overall, they're going from complete grassroots adoption of Bitcoin payments and now leveling up so that enterprise levels can actually participate and help and support grassroots adoption of Bitcoin payments.
Oh, man, that's a fascinating story. I'll look it up after, because I have a couple of friends down in Costa Rica, so I'll ask them if they they know and they've heard about this Bitcoin jungle. Now let's zoom out and talk about the bigger future picture. During our previous conversation, you mentioned there was going to be a press release mid-October showing peer review research on a new AI model. Would you mind telling us a little bit more about that?
Sure. So, while most of Amboss is focused on, liquidity tooling and building great products, we also have a research division that is focused on the machine learning, because the Lightning Network is inherently complex. Who do you connect to have really reliable payments? How do I maximize payment throughput even if I don't have a lot of Bitcoin? And this is the fundamental research question. And what we did in collaboration with Stillmark, our lead investor for the past 2 rounds, we've been working very closely with them to actually develop some machine learning that could help us solve this problem. And what we came out with is a research project that we've named Hermes. It uses a graph neural network to actually help us allocate Bitcoin and minimize bottlenecks and navigate around them in order to increase the payment throughput that's possible with the same amount of Bitcoin. And what we saw is that many of the algorithms to automate your Lightning node really fell short compared to Hermes when given the same problem. And what really sets this apart is the Lightning Network is a network, and when you talk about the math of networks, you're speaking about graph theory. So they would say the Lightning Network graph, and here we're using a graph neural network. So it's a neural network that's specifically designed to work on network systems. And this was our thesis going into this, that it would outperform compared to other models. And now we have the peer-reviewed research to confirm that. So what we're seeing is this new Hermes model is live in production for our Rails nodes and working to allocate Bitcoin in the most efficient way possible to increase Bitcoin's payment throughput, even with a small amount of capital.
That's amazing. So pretty much it helps Bitcoin and the network itself become more efficient.
Completely.
And it'll become even more efficient as time goes by. And as it starts learning more and more, as you accept more payments, it'll just get better, get more efficient, and help you guys grow in a more stable, efficient way.
Yeah, we really have to prepare for this technology adoption. And we have to do all the technology work and the research in advance so that we're ready. Because once payments start getting adopted, it is a network effect, and it does spread very rapidly. What we're seeing is Bitcoin itself is being adopted faster than the internet, faster than the adoption of electricity. And so these are trends that we think are going to continue. And so when we're thinking about Bitcoin payments and how quickly that's being adopted, we have to prepare ourselves for really exponential growth, or even beyond that, to be prepared and have the technology and the research in place to make the best use of capital, to have that extreme capital efficiency to be able to support the ongoing payment adoption of Bitcoin.
Wow. Now, looking 3 to 5 years ahead, what does enterprise Lightning adoption look like for you?
It's going to be really interesting because with stablecoins coming to the Lightning Network, I think we're going to see incredible adoption of stablecoins. And this is going to be one of those key drivers that causes exponential growth of the Lightning Network. When we're thinking about that future, what that means is that a payment may begin as one currency and end as another currency. And what Taproot assets on the Lightning Network mean is that you have in-flight currency exchange. So it doesn't matter what currency you like or what currency I like. All that matters is the value is transferred And these are exchanges that happen in real time as part of the settlement system. So that means that you can go to any country on earth and still be able to interface using the exact same payment protocol that we've all been using as Bitcoiners, as Lightning Network users. And now I don't need to convince someone about Bitcoin's price volatility, which has been the major objection to accepting Bitcoin payments. It's like, what if the price goes up or what if the price goes down? But now I can move past that conversation to say, okay, whatever currency you want to receive, here's a token that represents it. And now you can get plugged in. So basically, I can continue to pay out US dollars and want to keep my Bitcoin to myself, but use Bitcoin as the trustless payment interface that is actually kind of a neutral currency that is going between all of these edge nodes that are actually swapping the currency from US dollars to Thai baht or anything in between.
Wow. And if you had one piece of advice for corporate treasuries considering Bitcoin, what would you tell them as the first step?
I think the first step is really thinking about converting your existing business lines into Bitcoin generating machines. So if you run a real business, you're taking in real revenue, you can start accepting that as Bitcoin. And that's going to be a tremendous unlock. That small investment in payment infrastructure today actually compounds because you'll be saving on payment processing fees as this currency gets adopted or this technology gets adopted for payments. So save on payment processing fees, save on exchange fees to accumulate more Bitcoin, and then start putting your Bitcoin to work to actually supply the liquidity for other businesses to adopt Lightning payments.
And I mean, if there was any of our listeners that has a business generating revenue and is interested in joining, where and how would they do that? Or where would they start?
You can always find us at amboss.tech. That's our website. You'll see a contact form, but get in contact with us and we'll point you to the right resources to start planning and strategizing how you're going to adopt Bitcoin payments, trustless, internet-based payments that will save on payment processing fees.
Awesome. So you heard it. I'll link out the website below so everyone can visit and take a look at what Amboss is doing. Now, let's wrap it with a quick fire round, and then we'll go through the summary and closing. So, what's the most overrated Bitcoin narrative at the moment?
Ooh. I have to think about that. Oh man. I think right now a lot of people are focused on Bitcoin knots versus core and kind of what is actually going into the Bitcoin blockchain. And I think we have to understand that this attempt for filtering Bitcoin transactions is not resulting in any actual change because Bitcoin is consensus based. It's extremely neutral, and really the consensus for Bitcoin is to actually accept these types of transactions even if they're non-monetary.
And what's the most underrated enterprise use case?
I think, I've spoken a lot about this, but really enterprises are not thinking about Bitcoin payments. They're thinking about accumulating Bitcoin. And a lot of the work that we're doing is helping them move past this idea and get prepared for a future where they will be using Bitcoin payments.
One founder habit you respect?
Ooh, I think the founder habit is actually finding flow state. So if you can actually find a way to focus on just doing one thing, and setting an intention for a span of time. Get your light electronic music going, but overall just get one thing done and set aside time, because in our incredibly busy lives, it's actually very hard to focus just on one thing. It's very easy to switch to ADHD brain, and task switching, thinking that you can take on the world. But really, the people that absolutely crush it are the people that just focus on one thing and set aside those distractions.
And I'll add one follow-up question to that, because I think that's a very powerful point. Do you have any tip or any tips for founders trying to focus their time on one task? Because I think we all have gone through that, where you look at your calendar, you're like, oh my god, I have so much to do. And then an email comes in, WhatsApp comes in, and then you get distracted. No work gets done. So do you have any tips for any founders or anyone out there, trying to be more productive in their day-to-days?
Of course. I found a website called Flow State Radio, and that was flowstateradio.com. And basically, it's a DJ. He makes the playlist and also sets up Pomodoro timers, which are, fixed duration time playlists, and then forces you to take a break, look away from the computer, do some stretches, and then get back to the work. And that kind of Pomodoro timer experience was actually really helpful. I'll mention that, and then I'll tack onto it. One thing that I've learned is the Kanban approach, which was actually famously used by Toyota in order to prioritize different tasks, because priorities shift around. And really, I think the Kanban board started as a whole bunch of Post-it notes that got rearranged to actually to meld with how tech companies evolve, so that you can quickly shift priorities and just focus on one thing. And so those two pieces were really helpful in our execution strategy for Amboss. And that really allowed us to build an incredible suite of products that really just answer one component of this massive problem that we have, which is, global and international payments. They say, how do you eat an elephant? It's one bite at a time. And really that's how we've operated at Amboss. Kanban, try and find your flow state.
Thank you for that. I think that'll be helpful for us, the team, and everyone listening out there. And then last question on the quickfire round. Is there any book or podcast you would recommend to any founder, startup, or anyone out there? And this could be personal and professional. So we could give maybe 2 recommendations.
Sure. For personal, always big fan of sci-fi. So any Isaac Asimov, any Robert Heinlein, those are incredible books. On the professional side, to learn about sales for me was a big challenge, because I come to the world as an engineer, but learning how to do sales was a big lift. And the book that helped me the most was called The Mom Test, which really comes to this with an understanding that your mom will always lie to you to protect you. And the Mom Test trains you, as an engineer, or really as a person, to be able to ask the right questions to trick people into not lying to you. So that, if you go to your mom and you say, will you use my new product? And of course she's going to say, of course, honey, I'll use it every day, all the time. But then you have the crushing reality that she's not going to use it. So how do you ask the right questions of how do they do work? And that Mom Test methodology has really been helpful on calls to understand, how people interact with products. What are the actual pain points? And once you understand those, then you can deliver a phenomenal product.
Appreciate those. I think we'll all learn a little bit from the mom test, flow state radio, and then I think the biggest learning here was the flow state radio. I'm still trying to figure out how we're going to implement that for the team.
Let's go.
Now, two of the big takeaways from our call today are how Lightning has matured, from bedroom projects to enterprise grade infrastructure, how the future is wider and is getting here quicker than people actually expect. From stablecoins to Islamic finance demand, adoption is accelerating, and it will just continue to accelerate from this point on. And your work at Amboss shows how transparency, treasury tools, and yield innovation are shaping Bitcoin's enterprise future and the future in payment processing. So, Jesse, this has been a very powerful conversation, not just about Bitcoin, but also about how real infrastructure meets real demand. And we even got some bonus recommendations with the flow state radio and the mom test. So for everyone listening, check out Amboss. We'll link the website below. And if you enjoyed this episode, don't forget to subscribe, leave a review, share it with a colleague. And Jesse, we want to thank you again. Excited to see what Amboss builds next.
Thank you so much for the time, Johan. It was a phenomenal conversation.